your estate to real estate. It's Money Matters with Dino.
God forbid something happens again where the market crashes. The big question, the big fear is what happens then in a situation like that where you're the bank, right? I mean, we always talk about how lucrative being the bank is, but in a situation like that, values drop, people stop paying their bills. What happens?
Well, it depends on the expertise of the banker or the manager and the flexibility that they have. When this last crash happened, we saw banks go under. We saw banks selling off paper at major discounts and taking significant losses. And properties were what they called upside down or underwater, where the debt exceeded the values of the properties. And there's a few things that you can do when that happens. One of them is to foreclose and take over a property. And that's not always the best option during those types of times. Sometimes, at our office, we have a couple of other strategies. One of them is the no strategy, where you just simply do nothing. And the other one is take 2 aspirins and wait, where you just don't panic. And, as a boutique lender, we're able to have a lot more flexibility than a large bank. So, the way to navigate your way through those catastrophic times is to work with borrowers, keep them in the property, keep them paying, lower your return. It's better to lower your return and keep getting paid than it is to take over something that you're completely upside down in. And, investors and people that are not as quite as, experienced in this world, they say, I'll make a loan and I don't care if the borrower ever makes a payment, right? Well, that's a completely false, because no one wants to spend time in default. It's a dangerous place. It's an expensive place. And if you actually get that property back, if it reverts to you, then you've lost, because no one bought the property. You're into it for more than it's worth. So that strategy is not a strategy that we embrace.